grow my business and that can help you too. One, you have to work on your mindset daily.
If you give me 30 seconds, I'll show you a trick that will save you thousands of dollars. Here's how much money you need to buy a $300,000 home. You need
Really excited today. We have a guest that is absolutely incredible. The past 4 years, he's been able to achieve that goal of over 500 people financed through his company. And I'm very pleased to have him with me today. So please welcome, we have William Gomez.
Of course. Thank you so much for having me. I really appreciate that. And yeah, so we actually, it's funny. I started in the business February 1st of 2018. And last year I had, this was actually right before I started with content creation. So without the new content creation that I've been able to start and implement, with my business, I would have never gotten to meet you. So, but I remember last year I got a text from an old realtor that I used to work with, and she said, "Happy anniversary." And my first thing was like, what anniversary am I missing? Right. And then she was like, I was like, what, happy anniversary about what? And she said, on your work anniversary, because my first year, one of my goals was to be able to help over 50 families. And I was able to accomplish that. And her and I did like a little photo shoot together. So that's why she remembered that, because it popped up on her page. And then, so I was doing the math and everything. And I was like, oh my gosh, I wonder how many people I've helped now. And I added it up. And then I was like, wow, I can't believe started off at 50. Now we're over 500. And so now, I actually, after doing the final numbers, we are, at 600, over 600 and over $100 million funded and everything. So it's been awesome, looking back, and it's good to kind of, look back and really feel that everything that, hard work pays off, pretty much, just to say the least there.
Wow. That's incredible. And why did you choose the industry of, real estate, and especially the lending piece? I mean, there's so many angles you could have chosen as it relates to real estate. Why did you choose to become a loan officer?
So as many people in this business would probably, if they're being transparent, they would say that they necessarily didn't choose to be a realtor or choose to be a lender, but kind of chose them in a way, right? So for me, it's funny. My last name kind of tells it all, but most people that I meet don't know my ethnicity. They're always trying to figure out, what I am. Well, I'm Hispanic, and to be more specific, I'm actually Mexican. I was born in Mexico, and I was born to a single mom at 17 years old. And 2 years after that, my mom had my little sister. And then 2 years after that, my mom had my little brother. And then, so when you think of poverty, you think of poverty here in the United States. And you don't really, a lot of people don't think poverty other places is really, really, bad. So my mom had to work 3 jobs in order to just put food on the table. And it wasn't until she took us to this plaza where they were selling food, and I was about probably 5 years old, and we passed by a place, a little cart that was selling pizzas, and I said, "Hey Mom, can we get a piece of pizza?" And she goes, "Son, we can't afford that." And then, so this is actually when I knew that I wanted to become a salesperson, because I said, what if we just get one piece and we share it between all 4 of us? And she looked at me with tears down her eyes, and she's like, "Son, we really can't afford that." And so 6 months go down the road, and she tells me, "Hey, I think I found a solution to our problems," pretty much. She's like, "I found a job." And I said, "Great." That kind of matured me enough to know what scenario we were in. And I said, "Great. What's going on?" She goes, "But the job's not here. It's somewhere else." I said, "When are we moving?" She goes, "Well, it's in the United States, and I can't take you with me because, I don't have money to take you guys. So I'm going to need you to stay back with your brother and sister." And it was one of the hardest things, but she said it would only take 6 months. And so I was like, "I believe that you're doing what you should be doing to take care of us." 6 months down the road, she's like, "I think I can save up enough money to bring you guys here, but it's going to take me a little bit longer." So 2.5 years later, I got to see my mom for the first time. And so I was without her for like 2.5 years, but I've been able to take advantage of every opportunity that has been able to present itself for her giving me the opportunity to come here, even though it was so hard. And one of those opportunities was when I was finishing up college. I was working at a GNC. I was like a manager there, and I really liked what I did. And I knew that I needed to let go of that because like my plate was super full. And then somebody was like, hey, well, I know somebody that's looking to hire a teller at a bank. And I was like, kind of saw like a big demotion and everything. Went interviewed, got hired on, and I just thought it was just going to be like a seasonal job until something came up. But my manager was like, that's where I started. I started as a part-time teller. And I said, well, how did you get to be to where you are? And he goes, you just have to sell things. And I go, what do you sell at a bank? And, he kind of started teaching me things here and there. And there was this one specific time, even before I started doing loans, like mortgages, that I knew how to like sell credit cards. And I was trying to sell this lady a credit card. And she was like, that would actually help me out so much. And as I'm taking this application and I'm learning about her story, I'm literally seeing the single mom that's like pretty much like reminding me of like my mom there. And then but as soon as I clicked complete, it went ahead and it was declined. And I was like, oh my gosh, so I walked into I was like, give me a second, walked into my manager's office. And then I was like, hey, this was, declined. Like, is there anything else that we can do? And then he was like, well, does she own a home? And I was like, yeah, because that was part of the application. And then he goes, does she have any equity? And I go, what is equity? I didn't know what that
equity?
Was. Yeah. And then he came over like 3.5 weeks later. We were able to help her close on a home equity loan and help her pay off her debt and then give her some money. And that's whenever I knew, like, I was like, every person after that, I was asking like, hey, do you own a home? Do you own a home? And all these things. Right. And then, so the reason I shared that with you is because that is why I knew from that moment that I wanted to become a loan officer in order to be able to help people get into homes and get into a path to wealth. Because if mom would have had that opportunity, I would have probably, had at least a little bit different life right there.
Wow. It sounds like this is just definitely your destiny. That's an incredible story. Thank you for sharing that.
Of course.
Wow. So clearly this is where you're supposed to be, and you've helped so many people. And that's part of the reason why I'm glad to have you on today. So just let's get into some of the details related to lending. For an individual, and goes along with the story perfectly, is what exactly is a lender, or a mortgage broker? What are they looking for to qualify someone for a mortgage?
So if you're going to a traditional lender, all those people are working with the same agencies. So you have Freddie, Fannie, Jenny, like these are pretty much, to simplify it, it's like the government. They're the ones giving all this money out in order for people to buy homes. So if you go to your local bank and you're doing a traditional loan, or if you go to a correspondent lender, or if you go to a broker, all these people, if it's any type of traditional lending, they're all working with the same people that they're going to sell the loans to. With the reason I'm telling you that is because that means that we all have to abide by all the same rules. Now, every single bank or broker or correspondent lender is going to be different because there's things called overlays. What an overlay is pretty much a rule on top of a rule. So if, let's say, for example, FHA is a loan, it's pretty, common among first-time home buyers, people that have lower credit score. If you look at the FHA guidelines, that's going to tell you the minimum credit score is 580 with the 3.5% down payment, or as low as 500 if you're willing to put up to 10% down. Well, some banks might have an overlay that says, we'll do 580, but we can't, even if you have 20% down, we can't go anything below 580. Or mostly banks, especially bigger banks, they'll say, if you don't have a 640, we can't approve you for an FHA at all. That's like them putting an overlay on top of that. So the reason I'm sharing that with you is because each bank, they're basing off everything off of risk. So a lot of the times when people go in to get into a loan, they think, I have a good credit score, I should be good. But that's just one component out of so many different things that could expose more risk. What does your savings account look like? Do you have any retirement? If you don't have any money, and let's say that your down payment is being gifted by a family member, that's risk. It doesn't matter if your credit score is 800, but you don't have any money to buy a house. So the lender sees that as that's more risky. So we thought we were going to approve you, but now let's look at it over again. If you're self-employed, that's riskier than if you were a W-2 employee. And it just goes by layer by layer. So to answer your question is, each lender, anytime they're looking to approve somebody, they're looking at risk. How much risk do you have? And is it low enough risk for us to be able to be like, sure, here's $500,000, go buy a house.
Wow, that really clears up a lot of things. I mean, that takes me right to my next question. God bless you. That takes me right to my next question, which is it possible to be approved for a mortgage with a 580 credit score or lower? Is it even possible?
It is possible. Like I just said, the product that you would be looking at would be about an FHA loan. We can go as low as 580 if you have more to put down, which is very rare. That like people that are looking for an FHA loan have saved up for 10-20% down. But if they have it, we can go down to as low as 500. Now, here's the thing: is that once you meet those guidelines, though, you still have to run through everything to make sure that the application or the system selects the application. Because a lot of the times people think, once I meet these requirements, like, hey, I have 10% down and my credit score is not even, it's just like at 570, but that doesn't mean that you're automatically going to be approved, because we have to run you through an automated underwriting system that's going to automatically tell us, is this approved or not? Like, I'll give you an example. Yesterday, we had a lady that had a 647 credit score. So way above the, 620 that we need for a conventional loan. So we had her at 25% down and it was running approved. Everything was great. And then we were trying to help her more than just buy a house, but we're trying to make people's lives better as best as it can. Looking at everything financially, she had 4 other credit cards that she was paying a lot of interest on. These payments were equaling out to I think $1,600. So we're like, hey, what if we put 10% down and just pay off these 4 credit cards? It made her debt to income down lower, but then the application wouldn't run anymore because the system saw it as more risk. And most people that, especially that are not in the business, especially realtors that are kind of know what's going on, but when you go and say, hey, it's just not running, and they're like, it doesn't make any sense. Like, they meet the 580, they have the minimum down payment. So, but yes, it's more common for people around the 580 to be able to get loans when they don't think they can. And but if you have the right mortgage advisor, they'll most likely be able to help you get over a 600 or a 610 or a 620 in order to get a better rate. Because of course, if you're at the bottom of that list, you're going to get the worst score possible there.
Yeah.
Or the worst rate, the worst rate there possible. So you want somebody that's going to help you out and not just say, cool, yeah, we can get you approved. But if it's something like, hey, if you pay this credit card down $400, it will jump you up to 640, and then your rate will be this much better. That's why you want to have an advisor on your side.
Absolutely. Yeah. So there's so many different loan products, and some of them have gotten a bad name since 2008 and that whole situation happened back then. But from what I understand, and maybe you can clear this up for myself and for many, an adjustable rate mortgage, what exactly is it? And is it something that can be leveraged in today's market?
So an adjustable rate mortgage, known as an ARM loan. So we haven't seen a lot of them. Like you said, they do have a bad rep from back from, 2008, 2007 era. But what people don't understand is that back then, the reason they got a bad rep is because you put an ARM loan, which is an adjustable rate mortgage, which pretty much, to simplify what that is most people that are getting mortgages or have been for the last few years, when you look at your payment, the only thing that us as lenders can guarantee is not going to change is your principal and interest, because you have an interest rate at a fixed rate for the next 30 years. An adjustable rate mortgage, an ARM loan, what that means is you are willing to get a little bit better rate than the current market, but you're gambling pretty much whatever program you get. You can either lock it for 5 years or 7 years or 10 years, but you're saying, I'm willing to get this better rate, and gambling that I'll be able to refinance after 5 years and get an even better rate. If not, then it adjusts to whatever the market is doing. So think about it this way. A lot of people had really bad experiences because there's still been people getting ARM loans from 2007, 2008, even to before rates went up. So there were people that we were trying to help refinance in whenever rates were like historically low. And they were like, no, we'll just wait it out. We'll wait it out. We're not due until 2021 or 2022 or whatever. And then they waited too long. Well, now that it's gone adjustable and the rates are where they're at now, their payment, some people's payment went over $1,000 a month higher.
Higher. Wow.
And most people can't do that. Right. So is it good to get in today's market? I think it could be a good tool, but I think that people need to realize that you are still gambling, potentially your payment going up if rates don't go down. A lot of the experts are saying that rates will come down this year and then they'll start coming down. We've peaked inflation, and once we're finally in an official recession, that should bring rates down, but nobody has a crystal ball to be able to tell the truth. So if you're going into an ARM loan, pretty much betting and feeling like, I feel confident the rates are going to be down, I'm going to be fine, that might not be the best route to go about it. And then, to wrap it up, is the reason they got a bad rep is because people were using ARM loans with the private loans that they were doing back then, that people don't really do. They still exist, but they don't do them as much, which is meaning, like, I'm sure you heard stories that people would come in, if you had a 720 credit score and you told your lender that you made $120,000, they wouldn't even check that. Wow. They would, because certain private lenders would be like, sure, like, we'll give her money, we'll, blah, blah, blah. Or people that didn't have good credit scores. Like, they'd be like, you have a 400 credit score? Yeah, we'll give you a loan. So you partner all those bad, things with an ARM loan. Like, that's like, even them getting a loan. I meet people in today's day that I'm still like, I don't think it's a good idea for you to buy a new house that's going to be $1,500 more, even though you can afford it. And then so you pair that up, and what happened.
Yeah, perfect storm. Oh, wow. So what would you suggest for a first-time home buyer who has student loan debt? That seems to be something that a lot of people are going through right now.
Yeah.
Or have been, actually, for quite some time.
Yeah. So somebody that has student loan debt, I would say that it is actually, I recently did a video about, don't pay your debt off. Like, that was the hook on it. And it was explaining to people that there's such thing as good debt and bad debt. So not every student loan, I've been thankful enough that I have never had a student loan, but I'm pretty aware of kind of how they work. But there's some of them that you don't like. So many people are so worried about paying off their debt, like just paying off debt in general. But if you have, let's say, for example, student loan that it's at a very low interest rate, or it's in forbearance, or all these other things, right? You probably shouldn't be too worried about getting that paid off, especially if you're looking at buying a home, because that's whenever you get with an advisor that is going to tell you like your options. And right now, not across the board for most products, it's gone from a 1% down to 0.5% that we have to hit you for a payment. Now, if you're looking at, those larger balances, that still gives you a very small payment. That's all we're looking at. So many people have in their heads, I have $100,000 in student debt. I'm never going to be able to get approved. We don't care about the balances. All we care about is the monthly payments.
Yeah. And I would assume that if you're on time with those payments and consistent, that also helps the situation.
It can. It just depends on what your overall credit looks, because if all you have on your credit is student loans, it doesn't mean that you're going to have a super strong credit score. Like, you have to have a little bit of mixture. You have to be able to show the lender. Once again, it goes back to risk. Like, we have a student debt problem in the country. And the reason for that is because they're giving thousands of dollars to 16-year-old or 18-year-olds to be able to just go to school. So with that being said, getting a student loan is not that hard for most people. So the credit, the lenders look at it and say, yeah, you've had 5 loans out into your name. You've made payments on them all on time. And your credit score is, X amount, but that's still pretty risky because you didn't really have to get approved for those loans. They just kind of gave them to you,
Okay. So they're looking at it.
Yep. And then the other thing too, that I will say is, if you have student loans, please keep up with your payments, because that's going back to the other question that you asked me about, can you get a loan with a lower credit score? A lot of these like 500, 400 credit scores that we see is people that just have neglected their student loans and have like 10, 20, 30 or over 30 late payments on these student loans.
Oh, gotcha.
And they all have the same story, or, different stories that all add up to the same thing, but it's just excuses that you just kind of neglected that. And then you're like, oh, I'll take care of it later. And that does affect your score quite a bit.
Great. Okay. All right. So I'd love to know about a time, if there was one, where a client came to you and they thought for sure that they weren't going to be approved, but you and your team were able to get them approved for a mortgage.
I have a lot of those. Honestly.
Really?
Yeah.
That's good news.
Yeah. Have a lot of those. I'll share a recent one that we just closed last month, actually. So
I love those stories.
Believe it or not, we got this lead from this realtor in April of 2020.
Okay.
In April of 2020. And, had to follow up. I don't know if you knew, but, it takes about 6 or more follow-ups on all 94% of leads that actually close. So of course it all started with calling, wouldn't answer, playing phone tag. Finally, it took us a while to finally get an application. Part of the reason why a lot of people do that is one, of course, you have your normal procrastination, but 2 is because it's easy to tell you as the agent, like, yes, I want to buy a home. But me maybe making up in my head of reasons why I can't buy, I'm going to tell you, sure, I'll reach out to your lender or they can reach out to me. But I'm going to try to avoid that as much as possible, just because I don't want to get bad news. We're humans. We don't want to get bad news. So finally get a hold of her, get an application. Scores came back in the low 500s. And of course, I had to give those bad news, like, sorry, we can't approve you right now, but we can help you get this credit score up, right?
Nice.
So we did a little bit more of a dance for probably another like 6 to 8 months.
Wow.
Finally get her credit score over 600.
Wow.
And then just around the time where she feels like she's about to like just celebrate, like, I finally did it, she doesn't have any money for a down payment. Like, she hasn't saved anything at all. So from there, I'm like, okay, now we're going to get you into another plan in order to be able to help you save this money. And then she was like, well, I'm actually Native American, so maybe my tribe can help me. And then so she went and talked with them. They said, we have a program with your specific tribe that we can give you up to $25,000.
Wow.
And so she got super excited. Didn't realize how hard this all was going to be. From the moment she applied for that, it took her a year and like 3 months to get approved for that. And then throughout this whole time, we're following up, we're trying to make sure that her credit's not dropping and all that stuff. But it was around October that we finally ended up getting her score over 640 to get her like a way better rate than even if she was in the low 600s. She had the money. She had saved up now other money for things that people forget about, like appraisal, earnest money, inspections. People forget about that. They're like
closing costs,
all this stuff. So
of course,
we finally got her to close last month, and she actually received money back at closing, and she went in with over $25,000 in equity in her home. I mean, it was one of the best things. And I just, at the very end, she was like super thankful for me and just all these things. What's funny is whenever we actually approved her and she was ready to buy, I said, hey, when's the last time that you talked to, the agent? And she was like, who is that? And we're like, that's the agent that sent you to us. And she was like, oh, I haven't talked to her in over a year. So like the agent wasn't following up.
The agent didn't follow up.
Yeah.
And meanwhile, she's ready. Oh, was there a different agent that there was a different agent involved? I would think at that point. Oh, see,
no.
that
Well, that's the thing that my team and I for 2021, 87% of my business came from realtors. For 2022, 82% of my business came from realtors. So my whole goal is not only like, how can we get this person to a home, but I'm big on like, how can I help this agent reach their goals? Because, if you help others get what they want, ultimately you're going to get what you want. And the satisfaction that you get from seeing other people reach goals that you've had a part in is far exceeds, the commission checks and the numbers and all that stuff as well too. So she looked over and she was like, thank you so much. And I looked at her and I said, you should be thanking yourself, because there's so many people that if they did the work, if they had the patience, they could be where you're at right now, but they're not willing to do that. So you should be thanking yourself for all the hard work you put in the last 2.5 years. And she was like almost bawling. So that one was good. It was a really good one.
Oh my gosh. That's an amazing story. Oh my goodness. And I'm glad that you have many more like that. I mean,
yeah, there's so many people that even people that have good credit or all that. I mean, I've approved people for like $500,000 homes that have good credit and debt. They don't really have any debt. And I'm like, hey, congrats, you're approved. And they're like, really? I'm approved. What I try to tell people all the time, and going back to the content, and part of the reason why I feel like my content has been able to take off as it has is because, like we talked about it last time we jumped on a call, is when you simplify things, people can relate to that. Think about it this way. If you don't know anything about cars, and your car starts making like a weird sound, as humans, you're going to go to the worst possible place in your head. You're going to think, oh my gosh, I probably need a new transmission. And that's going to cost me like $10,000 and this is the worst, blah, blah, blah. You take it into the mechanic, that even if you have a mechanic that's been doing it for a month, they know way more about cars than you do. And then they come out and they say, I don't know, they say all you needed was an oil change. It's going to be $30.
That's awesome.
And you're like, really? That's it?
Yeah, that's it.
So that, like, of course, that story was super, super impactful, but there's many other stories like that they're like, really? I'm approved? Because you don't know what you don't know.
Right, exactly. Wow. Well, thank you for sharing that. That was a beautiful story. Wow. So what do you think the market's going to look like? I mean, it's really, anybody can say what they think, but I think coming from you, you're seeing so many different angles of the industry. You've been in the industry a bit, and even just your intuition. I mean, I'm willing to accept that as well.
Yeah.
What do you think the market's going to look like come spring? Do you think that the rates are going to drop? And do you feel that the inventory is going to increase? Because the inventory increasing would help everyone involved, because a lot of people aren't looking well, this is just my perspective as what I'm seeing is that people generally aren't moving for the fact that they want to know they're going to have someplace to go. It's not necessarily the interest rate. So the inventory is a part of the puzzle too, that I feel I'd love to get your input on related to what you think is going to happen come spring.
Yeah, of course. And a lot of this is, not only just my intuition, but it's just part of being able to be the best advisor that you can be for your buyers is staying up to date and everything, right?
Mm-hmm.
There's so many realtors, there's so many lenders that once they get their license, they're like, cool, I'm licensed to do this now. And I never have to study this again, besides maybe my continuing education that we have to do every year, which we know that most people don't really learn much from that. So one of the things that I pride myself in is continually keep learning on what's going on in the current market, what's going on with the guidelines, what's going on with the rates, what's going on with everything. Because if you're out of touch on that, you're not going to be able to help people to your full potential. So going back to inventory, people are like, I'm going to wait till the market crashes, right? Let's start there. Next time somebody tells you, hey, when do you think the real estate market's going to crash? Just ask them some questions back, some basic questions. Just like, what do you mean? Why do you think it's going to crash? Most people would just stop right there. They'll just be like, that's what everybody's saying.
Yeah.
Why do you think it's going to crash? They're like, maybe they'll tell you like, that's what happened back in 08, 07. Well, what happened back then? The market crashed. Well, why did it crash? And it's like, people don't know. They're just kind of going along with the narrative that the media is feeding them. And then, so part of the reason why the market crashed back in the day is not only because people that weren't supposed to be getting loans were getting loans, but because there was way too much inventory out there. So builders should have stopped building a long time ago. And if you look at some of these graphs of like the amount of like the population and like the household formations and everything, it was like here. And then like the amount of inventory was here. Now we're like right here. Why? Is because builders have learned their lesson. And also not only that, but with rates being higher right now, builders can't even afford to take their own loans out, aside from materials and everything that COVID did and everything. But now you got to realize that most of these builders have to take loans out to be able to build a house before they sell it and everything. These rates are like, I was just on the phone with a guy that's building his house. He has a construction loan that is almost 10%, and it's variable.
Wow.
So imagine like, do you want to build houses when you're making maybe this much less than you were a couple of years ago, right? So as far as the inventory goes, I think that we're still going to have an issue with it because builders are still not building as much as they were. And you're like, not necessarily rates, but rates are playing a part into this. And the reason for that is because people that currently have, like myself, like I'm even considering making this next house that I have like a rental just because my rate is so low, even though my house is not really like a rental house, but I'm like, I don't want to lose this rate like next time. And I'm not even planning on moving within the next probably 3 to 5 years, but that's all I'm thinking. I'm like, this is such cheap money that I don't know if I'm ever going to be able to see this again. So you have people that don't want to lose their rate, or simply don't, like the lady that I was talking to you about that I talked to yesterday. Her current mortgage payment is $1,250, $1,250. It's a super cheap payment for anywhere around right now. For looking at somewhat actually downsizing, believe it or not, downsizing. This house, she's had it for, I believe, like 10 years or so. So think about what she bought that house 10 years ago, what her rate was. She refinanced probably along the way, et cetera, how much principal she's paid down. So to downsize, her payment was going to be going up to $2,600. So even as somebody that's like, I don't care about the low rate, I just need to downsize, or I need to move or whatever, people are like, whoa, I don't want my payment to go up over $1,000 or whatever. So rates are keeping that inventory low as well too, just because people are not wanting to go into something more expensive, especially if it's not going to be an upgrade, right? So everybody is expecting rates to come down this year. I do believe that they're going to come down. I would say we're going to start seeing like a bigger difference in like the middle of the year, as early as like late first quarter. But here's the thing that people forget is that once we're there, we're still going to probably think that rates are high, because it's kind of like, you know, there's probably a lot of people watching that are maybe thinking that or that this year was going to be the year that they were going to get in shape, right?
Yeah.
And then even if you've lost 15 pounds, if you don't have like a six pack, you're thinking like, this isn't working. And that's why so many people fall off. But if you were doing like progress pictures like every, you know, other day or every week, and you see that process and you're like, wow, I've lost 15 pounds. Like I actually look better. And and it's only going to go up from here. That's going to motivate you to keep working out and keep losing weight. So right now, rates are still high. But what people aren't, I did a video about this that I'm like, you know, because Feds hiked the rates up, everyone's freaking out again, even though we already knew that they were going to hike them and everything. I did a video. I'm like, hey, do you know that Feds hiking the rates doesn't directly impact mortgage rates? Actually, did you know that in the past month, and this was from like mid-November to like a month after that, mortgage rates dropped a whole percentage point in that month. But people don't see that because they're not keeping track of it every single day. So they're just thinking like, so what I'm saying is like, even when rates drop down to like the low sixes, let's see, even high fives, people are still going to be comparing to the good old days, 2021, 2020, say, well, these rates are still super high.
Yeah. Well,
so yeah, I believe that rates are going to go down based on all the data. I really don't see inventory getting to where we need to be based on, you know, all the household formations that we are seeing. And actually, to wrap up the question, I actually just read this morning in the for some perspective in the Chrisman report. This is one of the other things that I look at every day to kind of keep in mind. But get this, in 2020, there was $4.1 trillion dollars worth of loans funded in 2020. In 2021, that number went up to 4.4 trillion. Wow. And in 2022, it dropped to 2.35 trillion. And 2023 is expected to be 1.7 trillion. So a lot of these numbers for 2020 and 2021, there was, you know, a lot of refinances. So that right there should tell you like, hey, with everything that they're seeing with inventory, with rates, with everything, it's definitely going to be way different than 2021, 22. But I still think that you just need to look at your own personal scenario and say, hey, is this a good time for me to buy a house? Not, is it a good time to buy a house? Because if you always look at it that way, you're not going to win.
Yeah, I hear you. Wow. Well, that's some good insight, actually. Thanks for sharing that as well. Of course,
yeah.
And so finally, what is on the horizon for you? Like, what are your goals for 2023 and beyond? And what's next for you?
So for me, 2020, I wrote a letter to my 5-year future self.
Oh, wow.
So I have, only like 3 more years on that. So I keep thinking of this letter every single day to make sure that I'm kind of checking the boxes per se, just because like I want to open that letter. I think it would be really cool to open that letter and to be able to be like, wow, I really, I wrote, I say, hey, William, I can't believe that you're a dad, and all this stuff. Like I told you my story, like I grew up without a dad. So like, I've never met my dad. So like, that's going to be a big chapter of my life. So even though I'm super, still pretty anxious and scared, to be completely honest. But, you know, my wife and I are expecting our first kid in June.
Oh,
So
congratulations.
thank you so much. Yeah. So that's one of the things that like, I want to be able, like, I wrote that letter to seeing like what I wanted to see overall in my family and my faith and my business and my health and my fitness and, you know, everything. And then, so I'm constantly thinking of that for at least until I get to that 5 years, in order for me to be like, okay, I worked hard enough to be able to be able to manifest all the things that I saw in my future. So that's one of the biggest things that that's top of mind. Now, for the next 3 years, I mean, for me, I mean, this business, I actually just posted a video today about, is there still money to be made in this business? A lot of people joined the real estate world in the last, I mean, I just shared those numbers that we had. But so many people get into this business and think, I'm going to make a lot of money and I'm going to have a lot of free time. And it doesn't really work like that. But if you do work hard and have good expectations, you can be very blessed in this business. And I have been very blessed in this business, and I'm super thankful for it. So it's created opportunity for me to be able to, invest in a couple different things that I'm hoping in the next, 2 to 3 years to be able to keep growing my team the way it has, while also having my hands on a couple other things that also bring me joy as well too. Because one of the things that I love, I've heard it and I can relate to it, but I'm so competitive of getting to the top of the mountain that I forget that the joy is in the journey. And I heard that the man that loves to walk will go way further than the man that loves the destination. So for me, I just want to make sure that I'm enjoying the journey. So outside of all those, so those would be probably the top two things though.
Well, wow, that's beautiful. Okay, wow. So where can people find you, and what are you offering online for people? And I'm sure it's your videos. You have some great information that I've shared on my page as well. So where can people find you, and what do you have to offer them? And if you can share that, that'd be awesome.
Yeah, I mean, people can just find me on either, Instagram, TikTok, or Facebook. My username is WGomez28. And I recently started doing YouTube videos as well too. So people can go in there and also get a good sense of what I go into there is not only like the videos that you're talking about, like expanding on them a little bit more, but then also, I'm thankful enough to live in Tulsa, Oklahoma. So it's a very affordable city that I'm also putting different segments there on pretty much what the city has to offer. And on top of that, the podcast, which people can find it there on YouTube, and then also on Apple Podcasts and Spotify. It's called Willpower. So and it's just what do I have to offer? I mean, the biggest thing is, out of everything that I'm doing, my biggest my biggest role is a loan advisor. So anybody that's willing to has any questions as looking for a home loan, I'd be happy to help them as well too. And then one thing that's starting out that I believe I told you about is anybody that goes and subscribes on my Instagram, I'm going to be doing a couple of monthly calls to be able to kind of help people further their personal brand, whether it's through Instagram, TikTok, or YouTube or whatever, in order to help their business as well too. So.
Oh, wow. That's incredible. Well, I'll definitely be on for that.
Sounds good.
Wow. So, I want to thank you so much for joining me today. This was incredible. The information was just really on point, and I'm glad that you were able to open up and share some information about yourself. And I'm sure there's a lot of people that can connect with that and relate to a lot of it. And thank you for that, William. And I want to wish you and your team and your family health, happiness, and a prosperous 2023 and beyond. Thank you again.
Of
And
course. Thank you so much for having me. And same goes for you. Happy New Year. I hope that, you ended up your 2022 where you wanted it overall, not just in business, but in life in general. And I hope that, you have some great goals for this year, and anything I can do to help, I'd be happy to do. So,
oh, thank you, William. Thank you so much. I
of
appreciate it.
course, of course, my pleasure.
Thank you.